What's up, everybody? I got another video once again to drop real quick. I'm trying to make sure I can push a lot of these videos out this week so it can make it easier on next week's topics. So by the end of next week, I look to go ahead and be diving full force into real estate of what I do, progress on my property, progress on my other investing strategies. That way we can move forward with better topics and such things that can really help you guys. These topics are just as important, but they're definitely more informative stuff and not necessarily in the field training and whatnot of what I want to do. So if you're new to my channel, please subscribe. I hope that you guys are sharing these videos, and the subscriptions will definitely benefit me, not only for the growth of my opportunity to reach out to others, but for you guys as well to let me know that I'm actually doing something in part of helping educate you guys. So please share this video. Once I hit 50 subscribers, I'm going to be releasing a $25 gift card to one of the random subscribers that have subscribed within the first 50. So please do your part, hit subscribe, and let's get to this video. Today's video is going to be on credit worthiness and why you need it in real estate. One more time, it's credit worthiness and why you need it in real estate. So first, to start off, what is credit? The ability to borrow money now with the promise to pay later. So at the end of the day, you are being given the opportunity to borrow money now with a promise to pay later. And with your credit comes a credit score. The credit score is simply a level to verify your trustworthiness of receiving credit. People, fall within certain scales of it, where you may be very, very trustworthy, where you may get, benefits of having the best credit score. And then, some people fall on the other end of the spectrum where it's not as great, where they have to do a little bit more things to still qualify, or may possibly be denied with reason as to how they can get approved once they fix certain things. So, hopefully that covers what is credit and then what is your credit score. Why is it important? It's very necessary if you plan to borrow money for major purchases, like a house, like cars, like applying for loans, such things like that. Your credit can be very important for those major purchases or major funds that you may need when it comes to doing other things. Obviously, your credit is where that would play a role. What can a good credit score do for you in general? A good credit score as benefits involve great interest rates and terms on loans and credit cards. So obviously, keeping up with your score and making sure it can maintain a high number and keep growing definitely opens up that probability or good chance or better chance to have the best interest rates, the best terms, versus if it has like challenging credit, it may have additional terms. You might need a cosigner, you might need to pay a little bit up front. Your interest rate may be a little bit higher just because of it being a risk involved. So, making sure you can maintain a good credit score definitely has its advantages. In general, that's what having a great credit score can do for you. In real estate, it's really good because you can leverage that for lenders, mortgage companies, and banks. Such loans as like your HELOC, your FHA, your VA loan, the cash out refinance, rehab loans, certain different things like that. Your credit score can be very useful, so you can leverage it to either get funds up front to do projects or funds up front for buying property. Definitely being able to have a good credit score or know your credit worthiness, helps towards that. What are some basic tips for helping maintain or grow your credit? So if you are looking to grow your credit, right, or maintain a great credit score, here are some basic tips that I would definitely give you to follow. First of all is know your score. Sites like annualcreditreport.com, every year you're able to log in and receive your credit score. But the goal is you want to be able to see all three of your scores. Some sites may only show you two, and it doesn't make it effective because you don't really know what each credit reporting bureau has as their rating for you. And if you do know all three, you can definitely vary out your chances of receiving a loan based on the minimum requirements of that loan's prerequisites. So definitely know your score. Another thing to maintain or build it is pay your bills on time. You never want to miss payments. And if you do, pay it as soon as you can. Even putting something on that bill will help you, because if you don't pay it, it goes to collections and it can cause more issues. Keep balances low. So most credit limits and lines, you never want to fully exceed and max out. I've maxed out credit limits and lines before. It sucks, especially when you're making payments on it and that interest eats up a payment, makes you feel like you're making 2 times the amount of payments, or that the interest is just not even doing any change to it. So definitely try to keep your balances low. The rule of thumb is 30%, but you definitely want to keep it lower than that to show that you're not even, you're using it, but you're not overusing even that small little 30%. And, slowly your score can continuously grow. Another one is limit the amount of times you apply for credit. But you definitely want to do your due diligence to not do an infinite amount of different credit applications, applying for all these credit cards, then turn around and go apply for, a house mortgage. You want to do your part to make sure you're effectively using your credit. Know what factors go into your credit score. Definitely know what it is that you can be doing to help better your specific credit score. Another one is to build your credit. I wanted to give an example of some life hacks you can do. Let's say if your credit limit was $3,500 and your monthly expenses were, it could be $2,000, it could be the $3,500, or it could be $5,000. Definitely an idea of a life hack to do is to use that credit card to pay on your expenses. And let's say if it was that $3,500 limit and your expenses are $5,000, if you can afford the $5,000 a month and you constantly are paying that out anyway, if you use the credit card to pay for those expenses that are in your monthly expenses, but then turn around and pay on top of the credit card by the end of the month, that can slowly but surely build your credit score. You definitely want to show to the credit card companies or the people that you pay your bills to that involve your credit that not only you can pay on time, but you give a little bit more. So if you had a $25 payment, doing something that's paying $35 or $40, still make it look better. Imagine if you were the one that gave out money to someone and you guys agree on a payment plan and whatnot. Would you be happy if they paid you a little bit more on top of their minimum payments each month? So you want to work down that interest as fast as you can. But, if you're on a budget, definitely want to try to pay just as best as you can on top of your minimum payments. And, work your debts off if they are within your credit balances by using Dave Ramsey's like snowball effect, or really paying a little bit more. The last thing is to avoid debts going to collection. Usually what would happen is if I owed a payment onto, my credit card and I don't make the payments, the punishment for it is the credit card company would report it and send it to collection. Collections will be these third-party companies that will buy that debt, and then they'll call you. And that's kind of like the bill collectors and whatnot like that, where you're either trying to avoid their phone calls, but if you do avoid it from collections, it'll go on your credit. And you really don't want to get to that point. Most of the credit card companies, I would definitely suggest that you read all the paperwork before you sign, and definitely do your due diligence to make sure you're always ahead on payments or you're making them on time. Because once you start falling behind, the last thing you want to do is have to play catch up when those bills are stacking on top of each other. Overall, credit can be used depending on what you want to purchase. You definitely want to monitor your score and make sure that you are aware of what's going on with your different debtors that you owe to, or that you plan to use and leverage for getting loans and whatnot. In real estate, it does give you another way of purchasing houses, doing projects of renovations, or even just borrowing money. And you definitely want to, at the end of the day, make sure it never can go to collections. And if it does, it's not the end of the world. All the collection companies usually send out some form of email or communication to you to repay that debt, pay your bills on time, and then you won't have to worry about, even worried about talking with a collections agency or anything like that. I hope this video is informational. If it was, hit the thumbs up, press subscribe, please. When I hit 50 subscribers, I'm going to release a $25 gift card. Up until that point, until my next video, hope you guys have a great weekend. Appreciate your time. I'm Kenny Springs. Peace.